Hello, all of you. How are you all? Started your preparation for the upcoming exam of 23, all the exams, right? Then here we start very quickly the first tax amendment video series for direct taxation, inter and final. All the students, this is applicable for all exams, whether you're writing CMA exam, CA exam. Now, the PDF material which I'm using is already shared in the free study material in the Concept Classes app. So below this video in the description, Concept Classes app link is there. Download that. And along with this, the top 50 questions, the theory questions, tax amendment. This is part 1. Part 2 is already there. So this is all the material which you will find in the free section over there. Top 50 theory questions for the costing, all are included there. And for any other further queries, do join our Telegram group also. In the link in the description, Telegram group, all links are given. And there I have already put up this PDF. So when you scroll up, you will get this plus lot of booster notes chapter wise, which I am putting. All flowcharts for residential status, business head and all. So this is it. Let us quickly begin. Much amendments are not there in the financial year 22-23. Your financial year is 1st April 22 to 31st March 23 and assessment year is 23 and 24. As amendments are not there so much what they were there last year and amendments are not linked much into the core of your topic, definitely you can refer. So many of you are putting me a message, so I'm answering here. The marathon lecture which is already put up for 10 hours each, covering each chapter of direct taxation, and the second one is covering in depth your TDS TCS revision. You can definitely watch that. That marathon lecture is for financial year 21-22, but with these amendments absolutely fine. You can refer all the core concepts. The purpose of making the marathon lecture is, of course, it is not enough for studies. For core studies, you need to go through proper coaching. You need to do writing practice. But when it is coming to revision, income tax is a subject which you need to repeatedly hear it. Like if I teach you right now the concept of updated return, you will understand the concept. But to sink it in your mind and to reproduce in the exam, you need to repeatedly listen to it. You need to practice examples. Even this PDF is having example for each and every amendment. Okay, right? So make sure along with this you refer the marathon lectures, and then tax concept playlist is there where I have put up just 5 minutes videos. What is the concept of marginal relief, unutilized exemption, how to position correctly the tax, then the surcharge, then the ESES, and so on. So let us begin. If you are not having, then pause this video, take a printout of the PDF, keep it beside you, because when you have that hard copy, it will make a lot of difference, right? So here we begin right now with the first amendment, which is related to your tax rates, slab rates. There is no change in the tax rates, slab rates. Okay, one thing, as I start, there are two ways of taking up amendment lecture. One is like if I start revising everything from the slab rates, this lecture would go very long. So there are separate videos for the slab rate. But when I'm discussing any amendment, like there's an amendment in the medical relief, section 17.2 in salary chapter. So with that, I will be explaining some background definitely. Okay. So there are few things printed in the PDF which are not exactly amendment, but they are to build up that momento ki okay, you come into this and now here this thing is added. Got it? That much only I am doing. If you want to refer the revision lecture, the concept lectures, and in fact I would definitely say since years I have been teaching this 2000 when I qualified, tab se I am into teaching field only. With experience I am telling you, along with financial year 20 to 23 amendments, this playlist wise, if you watch these lectures, definitely please go through the amendment lectures of 21-22 once. They are not lengthy, 45 minutes, 1 hour, wherever there's an amendment deemed resident and TDS 194Q and all were added last year. because those amendments are also very important for this year. Okay. So now I won't be going too much in depth into that topic. Related to amendment, what is relevant I'll discuss, but still I am explaining in my way. Any doubt you have, comment below the video, join our Telegram group, put me a query, write me a mail. It is your like right to ask questions to the teachers. Okay, so please make yourself very free और आराम से doubt पूछो. चलो. There are no changes in the tax rates, slab rates for individuals, special income, special rates. No changes, except when it is coming to companies. Domestic companies, the tax rate is 30%. But in case if previous year 20 and 21, the turnover of the company, we are in which financial year? 20 to 23. Assessment year 23-24. But if there is in your financial year 20 and 21, if the turnover of the company is less than equal to 400 crores, then tax rate for the domestic company is 25% instead of 30%. Otherwise, flat 30%, no basic exemption for companies. Non-domestic companies, that is foreign companies and all, it is 40%. Such as there's a beautiful amendment and they can ask you a nice MCQ on this. MCQs are not ki directly choose karo, tick karo, akkad bakkad nahi. MCQs are you need to literally work out. So for that reason, I'm discussing what is surcharge. If you earn above 50 lakhs or whatever are the limits, you can afford to pay extra tax. So as I start with surcharge, one thing should be clear to all of you. Look at the screen. On total income, you have to pay tax. On tax, you have to pay surcharge. And on tax plus surcharge, you have to pay the e-cess. Is this clear to all of you? I'm repeating. Tax is always calculated on total income. Normal tax, special income, special tax. Surcharge is always calculated on tax. And e-cess is calculated on tax plus surcharge. Now, there is a amendment in surcharge rates. Let us read for that these surcharge rates which are there for individuals, HUFs, AOP, AJP. Okay. If your income exceeds 50 lakhs up to 1 crore, surcharge rate is 10%. 1 to 2 crore, 15%. 2 to 5 crore, if your income is, surcharge is 25%, not on income, on tax. Tax, you have to calculate routine, slab rates. Then if your income exceeds 5 crores total income, then the surcharge rate is 37%. Now, till last year, there were 3 cases wherein higher surcharge rate of 25% and 37% were not applicable. What are they? Short-term capital gain on shares which are listed on which STT is charged, you can say 15%. Long-term capital gain on shares which are listed 112A, जिस पे 10% is the tax, above 1 lakh तक exempt है, and then 10% tax. Okay. And dividend income. I hope all of you remember CDT, DDT is washed out, and all the dividend what you receive is taxable in income from other sources. So with all this now, 15%, 10% and dividend income, on all these income now added from financial year 22-23 is long-term capital gain. This is long-term capital gain on shares which are listed and on which security transaction tax is charged. Now, other than this, if you have any long-term capital gain, you have sold property, plot, jewelry, any long-term capital gain, if you have, on that, additional surcharge rate of 25% and 37% are not applicable even if the income exceeds 2 crore. So suppose I am selling an apartment and I have got long-term capital gain 8 crore. Ma'am, if the income increases 5 crore, then the surcharge rate is 37%. But long-term capital gain hai na, the surcharge rate, even if your income is 8 crore, it will be highest surcharge rate will be 15%. So 10% is applicable from 50 lakh to 1 crore. 1 crore to whatever income you are having, 10 crore, 50 crore, surcharge rate 15% will only be applicable. I want to repeat, additional surcharge rate of 25% and 37% are not applicable on 4 kind of incomes. Short-term capital gain on shares 111A, long-term capital gain on shares 112A, dividend income and long-term capital gain. Okay, so these are the 4 cases wherein now additional surcharge rate of 25% and 37% are not applicable. Okay, right. So this is one small amendment in slab rates, and this one, of course, till last year we were checking the turnover of 1920. Now 20 and 21, if the turnover of the company is less than or up to 400 crores, 25% flat tax, otherwise 30%. These are the 2 amendments in the slab rate. Take down, note down. I don't know. You all are going to take the printout of the PDF from the Telegram group or from the app and all, wherever you want. But still, if I feel ki even, these kind of lectures are like I'm continuously speaking. So better you take all the notes, and if you have any doubt, ask me. Yeah. Chat box is also on. You all are doing live. You can ask me doubts in chat box also. Yes, dividend income is all taxable. I think I'll have to make a separate video, but just in brief, I'm saying whether you receive interim dividend, final dividend, or deemed dividend, or whatever you say, dividend received all is taxable in income from other sources. Only corporates or companies are getting a deduction under section 80M, which you will be doing it in final. Okay? CMA, CA final. Inter में तो 80M है ही नहीं. ठीक है? Yeah. One more amendment in surcharge is for cooperative society. Till last year, cooperative society was having single surcharge rate. From this year, for cooperative society, the surcharge rates are equal to domestic companies. Domestic company, if the income exceeds 1 crore up to 10 crore, surcharge rate is 7%. And if the income exceeds 10 crore, surcharge rate is 12%. For whom? For domestic company, right? 7% and 12%. So in the same way, cooperative society also from this financial year, if the cooperative society's income is above 1 crore and total income less than 10 crore, then the surcharge rate is 7%. If the cooperative society's income is above 10 crore, surcharge rate is 12%. So now surcharge for cooperative society is at par with the domestic company. Foreign company के लिए basic rate is only high. So surcharge rate is low, 2% and 5%. And average rate of tax we use in so many places for calculating TDS on salary. This one I have just added. This is not amendment, but few things are like to the core of our heart. I do say this because direct tax is a lovely subject, and maximum marginal rate is so many times asked in exam, in MCQs, and how do you tax AOP, BOI? So what is maximum marginal tax? Is highest rate of tax an individual should pay. So what is highest rate of tax? 30%. Individual is paying the tax in the slab rates, no? So highest rate of the tax payable is 30%. On tax, highest rate of surcharge 10, 15, 25, 37. On tax plus surcharge, highest rate, highest nahi, एक ही rate of ESS is 4%. So if you calculate, maximum marginal rate is coming to 42.744%, and this rate is very important for MCQs. Okay, just 2 seconds, I would be back. You all please. All right. The next amendment is for section 68, 69. Do you all remember all this? Undisclosed income, if there is any cash credit, unexplained asset, unexplained investment, taking loan on hundi above 25,000, and all those cases. Whenever there is these kind of income wherein you don't have the reason ki ye paise kahan se aaye. If there is a raid or survey and cash is recovered at home, it's yours. If any assets are recovered, they are yours. If you have done any foreign trip on 25th anniversary, birthday of the son, lavishly spend in a 7-star hotel, and if you say, where did you get the money to do that unexplained expenditure? You have done expenditure, you don't have the source key from where you got the income. That income is taxable at flat 78%. This is not amendment, this is the background. Whenever undisclosed income is taxable, it is taxable at 60% plus surcharge 25% on 60%, and on tax plus surcharge 4% he says, that is 78% tax. Here, and no basic exemption. You can't say, ठीक है मैम अभी तक मैंने इनकम छुपाई, अब मेरा 50 लाख इनकम है, पर give me basic exemption. Okay, I have this business loss, can I set off? No losses, no set offs, no basic exemption, nothing is allowed. Done? Now, one thing I hope is clear, that all the income is taxable at 78%. Right? Now, in this, one amendment is in the cash credit. You know what is cash credit? In your book, some entry is found and you don't know the source of it, wherein any sum is found credited in the books of accounts and the SSE offers no explanation about the nature, source, or whatever explanation is he gives, AO doesn't find it satisfactory. Sum so credited may be taxed as income. कैश अकाउंट डेबिट टू हसमुख लाल. हु इज हसमुख लाल? पता नहीं. क्यों पैसे लिए? पता नहीं. तो इट इज अ कैश क्रेडिट और एन एंट्री इन योर बुक which you are not able to explain. It's your cash, your income, your black money. You have to pay 78% tax on that. Clear? Now in this, one amendment added is, generally in section 68, taxable is cash credit entries. But suppose if you have taken a loan or a borrowing, okay? You have taken a loan or a borrowing in the books. Now you're saying cash account debit to Hasmukh Lal, as I said. So I have taken loan from Hasmukh Lal. AO can ask Hasmukh Lal, okay, you have given loan to Dipti ma'am. Where from you are getting the source of income? Is Hasmukh Lal is not able to justify? That income will be added in my hands. In my books, any cash credit, it's my income. I have to pay 78% tax. ये तो पहले से था. Now added is, if there is a loan which I have taken and the person from whom I have taken the loan, if he is not able to justify, it's added in the income. Clear to all of you? Huh? So, wherein any if the SSE is not only needs to provide explanation regarding the source and genuineness of loan and borrowing credited in his books, but AO may also ask explanation from the lender of the funds to explain the source of such funds. And if the lender fails to give satisfactory explanation, then such loan may be added as unexplained cash credit to the total income of the SSE. Got it? I've given an example also. In the books of Suresh, unsecured loan is taken from Mukesh. If Suresh is showing any cash credit, straight away income. This time, Suresh is not showing cash credit. He's showing unsecured loan taken from Mukesh. So, Suresh has taken the loan from Mukesh. If Mukesh is not able to explain the source of money, AO is asking to Mukesh, Mukesh, you have given a loan to Suresh. From where you have got this? If Mukesh is not able to show, same will be treated as deemed income of Suresh. And it will be taxable under section 68 at 78%. 60% tax, 25% surcharge, and on tax plus surcharge, ECESS. All clear to all of you? I would request you all to do one thing. No, you all are watching it as a recording. Pause this video until here slab rates are done. So along with this, if you revise all the slab rates from a separate video which I have already made on the slab rates or any other material you have, then this amendment will sink. Hai na? Rather than doing all the amendments together, I thought of making the video such way, but then they were going too lengthy, and according to my schedule, it's not possible कि I will revise full capital gain and then give you an amendment कि capital CII for this year is 331 like that. Huh? So I'm giving all the amendments according to this PDF which I have made. If you have any doubt, ask me. To repeat before we go on to the next chapter, slab rates and all three major amendments are there. One is for individuals, HUF, COP, BOI, additional surcharge rate of 25% and 37% is not applicable on STCG, LTCG, dividend income and LTCG. Done? Okay. Next, for cooperative society, surcharge rates are made at par with the domestic company, 7% for income up from above 1 crore to 10 crore and above 10 crore it is 12%. Done? Right. Now, next amendment is if there is a cash credit found in the books of the SSE, it is taxable. Okay, at 78%. But if there is an unsecured loan you have taken and the person from whom you have taken the unsecured loan, he is not able to give a valid reason, that will be taxable in your hands. Are you all following the amendments? Is my speed fine? If yes, do comment below the video. Lot of efforts have been taken to cover up all minuteness. You check abhi aage. All of you have already purchased the lectures in November, December. These amendment videos along with those lectures done. And whenever you feel like you're traveling, you're out, you're not able to have your tabs and books and all, put your headphones and listen to the marathon lecture. That is going to be super helpful. और उसके beyond कुछ करने की जरूरत नहीं है. RTPs, MTPs upcoming, of course, I will solve with all of you. Earlier ones are already solved. You can check it in the playlist. Okay. Yeah. Only this much is amendment, but just to revise, I have added a B point also here. And it is regarding the closely held company. What is closely held company? That answer should come. Good, good, good. Private company is called as closely held company. So if private company has got some money in the form of share application or share premium or share capital, and if the AO is asking to shareholder, you have purchased the shares of these private company, what is the source of the income, from where you got the money to purchase? If shareholder is not able to explain the source of income, it will be taxable in the hands of the private company. This exception is not applicable. The onus to prove about these loans and all is not applicable if from whom you have taken the loan they are Ventura Capital Fund or Ventura Capital registered under SEBI, because they are already following the guidelines. That's all for the slab rates. Coming to your residential status, no amendment, but I feel deemed resident is very important for the upcoming exam. Coming to agricultural income, no amendment, but agricultural income, they will ask you a 5-mark problem, gaya wo zamana. Now in your total income, 14-mark problem, one important flavor they will add is agricultural income, so that you calculate the tax in step method or ATG deduction, donation wala. These are the toppings you can say in the total income problem. And there is no choice. Question number 1, total income problem, you all have to solve. So you can note down separately what I'm saying, keep pending to be done. And whenever you get time, do revise agricultural income, how to calculate tax and all. Done. Yes. In the marathon lecture, agricultural income resident, sub sequence mein pura revision hai. You can watch that, no problem. That is pinned lecture in my YouTube talk. Chalo. Starting with the heads of income from salaries, there's a perquisite 17.2, and this is not amendment. This is again to build up the background. You remember medical facility provided by employer to employees. Actually, employer to employee, any benefit comes in cash or in kind, it is taxable in the hands of employee. Why? Waterfall, perquisite. यहाँ से जो flow हो रहा है taxable. But if the employer is giving medical facility to the employee in the government hospital or hospital maintained by employer, it's exempt. है ना? Medical facility given to an employee in hospital maintained by employer, this is not taxable. Sum paid by employer for expenditure incurred for prescribed diseases, HIV, leprosy, all that, exempt. Group medical insurance premium is paid by employer, exempt. abroad employees traveling along with the traveling and stay expenses, it will be exempted up to the RBI limits. Okay. Now, whenever we talk about medical facility, it's not only restricted to employee but to his family member. What does family member mean? Spouse. For husband, wife, wife, husband, children, parents, brothers and sisters, if they are dependent, they're not earning anything and they are dependent on individual, then it is taxable. Sorry, then it's a part of the family. Clear? Now let us begin with what is the amendment in income from salary. See, we all know that due to COVID, a lot of disturbances were there, and so many employer, they gave money reimbursements and all. So one amendment I am discussing, this has got effect here also, and an income from other sources also. Okay, let us see how it works. I am explaining first in my way and then I will read it. Okay. So in the financial year 20 to 23, they say if employer has reimbursed to employee any expenses related to COVID treatment, then those expenses will be exempt in the hands of employee till they have actually incurred. The remaining, if you are an employee, it will be taxable as perquisite. For example, employer gave 10 lakh rupees as expenditure incurred by employee for himself or family members, what we saw now, brothers, sisters, dependents, spouse, children. So employer has given 10 lakh rupees to employee for the COVID treatment, or if someone has deceased, then post COVID within the 6 months of the death, and the employer has given the reimbursement. So employer gave 10 lakh rupees to employee, but employee has to maintain all the documents. He has to give the medical report that the patient was COVID positive, if there is a death certificate and other all documentation. Now, the documentation and the proof given by employee is only for 8 lakh rupees. I'm making it very simple. Every amendment you will get an example which will make it very clear. And this is the first amendment lecture, so applicable for inter-final all the students. For final assessment procedure and all, I'll make separate videos. So listen carefully. This can be asked. And salary chapter is one bit goes wrong, all total goes wrong. No? Gross salary, net salary, and tax and all. So listen once again. Employer has given 10 lakh rupees to employee as the reimbursement of COVID related expense. Employee had all the proof and everything for 8 lakhs. 2 lakh will be taxable in the hands of employee as taxable medical purpose. Clear? And if there is a death, then death certificate, death should happen up. Conditions the government is putting up is death should happen within the 6 months of COVID positive ka report. Another, that much is not required for exam. Just understand the concept. Still all details are there. Isko padhte hain. Chalo. So, ye to medical facility is clear, no? To all of you, let us. Any sum paid by employer in respect of expenditure incurred by employee on medical treatment of himself or his family member would not be treated as perquisite. Okay? Provided the employee has submitted COVID-19 positive report, all the other necessary documents, and a certification of all the expenditure incurred and all. Okay? Easy? Huh? Now, with this, why did I say there's an amendment in income from other sources? Take a pause, listen carefully. One of the beautiful aspect, you all are too good at learning the things individually. When it comes to income tax, it's all linked up. ये ऐसा साइकिल है, विशियस साइकिल नहीं बोलो, अच्छा साइकिल है, पर ये साइकिल है. Suppose there's a COVID positive patient in your home and you have got money not from your employer but someone else. कोई संस्था या कोई neighbor, किसी ने ही gave you the money. Then if someone is helping you out for the COVID treatment with 5 lakh rupees and your actual expenditure is 3 lakh rupees, 2 lakh rupees under section 56 is treated as gift in your hands from unrelated person if you are getting. I want to repeat, if employer is giving to employee excess money, treated as medical perquisite, taxable under the head salary. If anyone else is giving you 10 lakh rupees and your actual expenditure is 8 lakh, 2 lakh is treated as gift received from unrelated person, taxable under income from other sources. So 2 amendments we have covered. ऐसे link करके ही पढ़ना है. ESOP is there in income from salary. ESOP is there in capital gain also. Link it and study. Tax on perquisite 1010cc is there in salary. It's there in business ed. Now if I do linking up, we will get diverted. Abhi concentrate on the amendments. So salary may done. This amendment I have written here, actually it's an amendment, so I'll cover it up again in deduction also, but this is related to employer-employee relationship, so I want to cover. You remember in 80 lot of deductions are given, like 80 1, 80 2, additional for national pension scheme, 50,000 over and above 80 1B. Again, I have made a separate video because that is an area where students need help. Right now, there's a small amendment in 80 when employer is contributing to national pension scheme. The tax limit, instead of 10%, uska jo bhi basic plus DA plus commission based on turnover, of that earlier we used to contribute 10%. Who? Employer. Now you can contribute 14%. You will say, ma'am, 14% was there last year also for central government employee. From this year, they have added state government employees. I want to repeat. If state government wants to put the money in NPS, National Pension Scheme, Atal Bima Yojana and all that, and employer, your state government can put up to 14% of basic DA and commission. Until last year, it was 14% only, but only for central government employees. From this year, state government employees can also put. This will actually have an impact in your deductions. And deductions and TDS amendments, we are going to do it in video 2, which is like core, very important. But ye bhi important hai sab working ke liye. So that's all for income from salary. Check it and ask me if you have any doubt. Pucho, comment karo. And really, if you feel the explanation is helpful, share it with your friends, this video. Making these kind of videos is little, because generally whenever we explain, we say, chalo, abhi yahan se yahan tak aap likho. And then, in a live class, I mean, say live class hai, but in the routine class, a lot of work you all are doing and we get that rest. So give me that pausing moment. Thank you. Thank you so much for waiting. Chalo, let us go on now to income from house property. Pyara bacha, सबसे beautiful head of income, super scoring. This time also 6 marks problem came. 3 column you have to make SOP, DLOP. No changes in house property. Just revise the same video which is uploaded and done. Income from business head. This amendment, I feel they are playing like language of law. There's an amendment in general deduction. Now you all remember, income from business, it starts with section 28 chargeability section, and then section 30. Okay, section, I can say section 32, section 36 are all the sections wherein deduction is allowed for depreciation, premium, this, that, scientific research, based on some conditions. But section 37 is like Brahmas, general deduction. It says any deduction which is related to business, wholly spent for business, revenue in nature, not capital, not personal, but that expenditure is core, wholly related to business, but it is not allowed in 30 to 36. It is now allowed in section 37. Clear to all of you? It is now allowed in section 37. Okay. So that's what it is saying. In this, they have added something. Let us see that what it is. So this is a background material. General deduction, if there is allowed under section 37(1) of business head, allowed disallowed wala juggling hai yahan pe, add less. Expenditure should not be any expenditure of the nature described in section 30 to 36. It should not be in the nature of capital expenditure. It should not be in the nature of personal expenditure. It should not be expended wholly and exclusively for the purpose of, it should be expended. Okay. In this, they have made 2-3 additions. What is the first addition here? Expenditure should not have been incurred by SSC for any purpose which is an offense or prohibited by law in India and outside India. Ma'am, but mind, this expense is related to business. For example, GST is allowed as expense? Yes or no? Is GST allowed? Yes. Interest on late payment of GST, is it allowed as expense? Yes. But if there is a penalty, it is not allowed. Ma'am, but I paid penalty related to GST and it is my business related expense. But why did you pay a penalty? Because you did wrong. So, ek to galti karo and then you want to allow that expense. So penalty is like an offense, something wrong you have done. It's not allowed in law and you did fake invoices and all, and now you're paying penalty. So whatever you have paid penalty, can you claim it as expense? No. So in section 37(1) general section also, if you have done an expense related to business, but it is prohibited under any law, narcotic law, drugs law, smuggling law, ye wo kahin pe bhi, if it is prohibited, if it is not allowed, then it is not allowed under 37(1) also. Second, to provide any benefit or perquisite in whatever person, whether or not carrying on business, if it is in violation of law. Simple example is bribing, hafta dena and all that. Ma'am, this is very routine. We need to bribe and our business of construction is like that. Sorry, just I'm giving one example. But just our business is like that or ye to chalta hai and all that. So when you are giving a benefit of perquisite which is legally not allowed, lot of discussion is there that when you go to doctors, you give them freebies and a lot of passes for the weekend resorts and free samples and all that and all. So related to that, if you are giving them, but according to their medical council, they are not allowed to take that. It's not allowed for doctors and consultant to take all this kind of the benefit from pharmaceutical company. Then if you cannot allow it as your business expense. Last one, to compound an offense under any law for the time. I know this is a language like law and law is not my subject. I'm trying my best. फिर भी कहीं confusion है तो you ask me. To compound an offense under any law for the time being in force in India or outside India. To compound an offense, sometimes when we do a mistake, for example, we have made a building and that building is related to our business, but we have deviated the construction, and to regularize it, we buy TDRs and all, some construction related, and you can make it legal now. You are not allowed to do commercial activity in this area, but if you pay some amount, now you are able to do the commercial activity. So what you are trying to do is, you are trying to compound the offense by, patching up the offense, which is actually illegal, by giving this. Okay. So that is not allowed. In short, 37(1) says one line answer, any expense which is illegal in other laws is not allowed as business expenditure under section 37(1). That's all. Next is with retrospective effect. Now this is a language correction they are doing. With retrospective effect, they are saying that tax will include surcharge and ESS. So as you all know, income tax is not allowed as expense. Income tax you are not paying only on business income. No, you are paying on salary, house property, capital gain, sub. Income tax is not allowed as expense. So along with income tax, surcharge and ESS, this language flaw they have corrected. ESS and surcharge are a part of income tax. They are also not allowed as expense. Income tax refund, PNL के credit side में ना ऐसे देते हैं, income tax refund 2 rupees. I'm into the concept, so 10 रुपए 2 रुपए, करोड़ों में बात नहीं करनी. So PNL account credit side income tax refund is given 2 rupees. Is this your business income? No. Income tax is not allowed as expense. Income tax refund is not my income. Yes. On income tax refund, if I receive some interest, that interest will be taxable in income from other sources. GST is allowed as expense? Yes. Refund of GST, is it my P&L business income? Yes. Custom duty is allowed as expense? Yes. Refund of custom duty, is it my business income? Yes. So through this small amendment, they are saying along with income tax surcharge and e-cess will also not be allowed as a expense. And one small beautiful amendment in section 43B. What is 43B? 43B is that few expenses, if they are outstanding in March, expense to salary to outstanding salary, interest to outstanding interest, these expenses are outstanding, you debit it, then department is saying, okay, if there are outstanding expense, at least make sure you pay them before due date of filing your return, be it July or October or November, according to the due date, and then that expense will be allowed. Are you all with me? Samajh mein aa raha hai? Not for all. So 43B is having that list of expense, government payments, interest on loan and all. If it is due and not paid, it will be allowed provided you paid before due date of filing the return. In March, you are saying interest account debit to interest payable to SBI, then go and pay it in April, May, June, and July. If not, that expense is not allowed now. 43B will disallow. Next year, if you pay it in December 22, it will be allowed in next year. Got it, all of you? In this, small amendment is there. It's in depth. Thoda sa I will explain. Suppose what is happening that I have taken a loan from SBI, 50 lakh rupees. Okay, listen to my example. I means my business, I have taken a loan from SBI, 50 lakh rupees, and I have to pay them 5 lakh rupees interest. If interest to interest payable to SBI, I need to pay that before due date of filing the return, otherwise expense will be disallowed. 5 lakh ka interest I have to pay them either in March, or if I saw accrual basis is allowed under section 145 business head mein, you can maintain accrual or cash basis, not hybrid basis. So allowed hai. Chalo. So 5 lakh rupees I've shown outstanding. Now what I do, instead of repaying this loan, I mean say this interest of 5 lakh on 50 lakhs, I convert this as additional loan. I have done an agreement with the bank. Bank, this 5 lakh rupees I'm not able to pay you. Take this also as a loan. So interest account debit to 5 lakh rupees loan. I have added it as loan. Did I actually pay 5 lakh rupees? No. Government is saying it's not allowed as expense. But in 5 lakh rupees, suppose March and April 2 months installment you have paid. Will that be allowed? Yes. थोड़ा सा ही समझ में आया 50%. Pay attention. When few things are like that, you need repetition, and we are best at doing that. Sure. Let me read out and then again take one more example to make it clear. If interest is payable on loan, which is converted into debentures or any other instruments, means a second loan by which liability to pay is deferred. On 50 lakhs, you had to pay 5 lakh interest, no? You converted it into loan. Such interest shall not be allowed if not paid. It will not be allowed as expense. If interest is converted in loan, interest will be allowed till the extent of repayment. Interest is allowed till the extent of repayment of loan. Okay? Let us see now how. Ravi has taken a loan from Bank of India 20 lakh. On that, interest due is 2,40,000. If Ravi says interest account debit to outstanding interest 2,40,000, this will be allowed only if you paid before due date of filing the return. Instead of paying, Ravi converted interest 240 in the form of additional loan, repayable in 20 installments. So pick up your calculators. 2,40,000 divided by 20. 240 divided by 20. 12,000. Huh? Okay, 20 installments mein we are going to pay interest in the form of installments. Instead of paying interest, Ravi converted it into installment, out of which 3 installments were paid. Now, how much is interest due for the year? 2,50,000 disallowed. Scratch nahi karna. Scratch karna allowed रहता तो you would have not studied rectification chapter. Add less concept is disallowed. 2,40,000 interest debited in P&L account is disallowed because it's not paid. But in 240, 3 installments you have paid. Yes, of 12,000 each. 240 divided by 20 installments, 36,000. Will 36,000 interest be allowed? Yes, because interest in the form of loan also you have paid. Expense किया तो pay तो करना पड़ेगा ना. Now is it clear or not? I gave example, then I read it. Again I gave example. I don't mind explaining still more. पूछो, कोई doubt है तो ask. Not cover all the amendments in one lecture. We'll concentrate on slab rates and 5 heads of income, deductions, return, and TDS. We'll make a separate video. Yeah. All right. Check this and tell me, is this clear? I want to repeat. 43B says, if there are any expense which are outstanding, not all the expenses, there's a list of expense covered in employee related expense, interest on bank and all, loan and all. So if you have not paid, you have to pay it before due date of filing the return, then that expense is allowed, otherwise disallowed. But if you convert that interest in the form of loan, that loan is not allowed because you have not paid it. You just converted your interest expenditure in loan. So that is not allowed. But in the loan, some installments you have paid. So up to the repayment of installments of loan, 36,000, that much interest you have paid, no? That is allowed. Please let me know if this way of learning is clear or not. For every amendment, I am giving you example. Because they are going to give not कि हाँ 5 amendment लिखो, ये कोई ऐसा paper नहीं है. These are professional level of exam. I have taught myself. I have cleared my taxation in 97 when it was CA Inter. Then it was PCC. Then it is IPCC. Then it is again now CA Inter. And again on verge of changing the syllabus in 23. So I've seen one thing, that amendments are asked in the form of case studies, examples, MCQs. That's why the more example we do, better. Anywhere, if you have a doubt, I'll come with a clarification video for amendments. That's my promise. Okay? All right. So what were the 2 amendments in the business head? 37(1) में illegal expenses are not allowed, bribing, haftas and all. ESS is a part of tax and surcharge, so not allowed. 43B में, if you convert the loan in interest into the loan, it's not allowed, but whatever part you repay the loan is allowed. Now, income from capital gain. Whatever problems you calculate for indexation, you use CII, cost inflation index. Till last year, it was 317. For financial year 20 to 23, it is 331. Usually, this is given in the exam, so you need not worry, but this latest, so you all should know it. 331 is the latest, this CII. Okay, right. Next small amendment is, so many cases we take the cost of the previous owner, right? Suppose I have got a property as a gift from my grandfather, my Dadaji, and I transferred it. When I got as a gift, this transfer is exempt because there's no consideration. When I transferred this property to a third person, I can take the cost as cost of the previous owner. Who is my previous owner? Dadaji. So if my Dadaji has purchased it, I will take cost for my grandfather. But suppose for any reason the cost of the previous owner is not available, then you have to take the fair market value of the property or asset, whatever, when the previous owner has acquired it. That's the amendment. I want to repeat. Whenever the property comes by way of will, gift, inheritance and all, and when I transfer it, I take the cost of the previous owner. Not the previous owner. My Dadaji has got a gift from his brother. So Dadaji ka cost nahi, then Dadaji's brother. So you have to take the cost of the previous owner who has paid for it. But if that person is not having clear, matlab nahi malum hai, cost you are not able to make it, you need to take the fair market value of the property for the previous owner. Not the day he transferred, what is the fair market value. That they will give in exam to confuse you. I got the property as a gift from my Dadaji in 2014. When fair market value, they'll give in exam. But my Dadaji purchased in 2002. So in 2002, what was the cost for my Dadaji? That cost I will be able to deduct. And according to Bombay High Court's case, if I get it through will inheritance, I can take indexation also from 2002. Few cases you take the cost of previous owner, but indexation starts from 2014, the day you hold. Capital gain chapter अब पूरा नहीं पढ़ाना है हमको. All right. बोलो. Let us read this one. Cost of the property in the hands of the previous owner cannot be ascertained. Then fair market value on the date on which capital asset became the property of the previous owner. The day previous owner acquired, if cost is not available on that date, what would be the fair market value that you can get? That will be taken as the cost of acquisition. Next, computation of the fair market value of the capital asset for the purpose of 50B. This is not an amendment. ये दो amendment नहीं है, but ये last year के इतने important amendment है कि short like CMA exam तो short they keep asking questions on slum sale. Do you remember slum sale 50B? Lump sum you have transferred it and all. Just 1 second. So this is 50B. Now what it says, in case of slum sale, they say that whenever a part, you know what is slum sale? I'll have to explain a little bit. When lump sum, I have transferred my business, building, plant and machinery, furniture, I have transferred. And against that, you are giving me the consideration. So the capital gain is calculated as sale consideration and cost of all the assets individually. एक एक कहाँ करोगे? Furniture is transferred, plant and machinery. So we take cost as the net worth of the business. And there's a way to calculate net worth, which is taught to you in the slum sale topic, right? So now, when I talk about this slum sale and all, the amendment here is that whenever an asset is transferred in the form of slum sale, the sale consideration, the sale consideration will be the fair market value of the capital asset given, furniture, plant and machinery, बुक्स प्रोजेक्टर जो भी मैंने बिजनेस क्लोज किया तो आपको दे दिया फेयर मार्केट वैल्यू ऑफ द कैपिटल एसेट ट्रांसफर्ड एंड फेयर मार्केट वैल्यू ऑफ द consideration received from you in monetary or cash or in kind, whichever is higher. Shall I repeat? In case of slum sale, sale consideration minus net worth is the capital gain, no indexation, and this is optional. All that you study in 50B. So a small amendment over there is, don't take actual sale consideration. For capital gain, take sale consideration as the fair market value of the asset given up or fair market value of the asset received in cash or money in kind, whatever. Whichever is higher, that will be taken as the sale consideration. Next, added in the capital asset are two assets. You all know what is capital asset? Capital gain chapter chargeability section is 45. It says knock. If you sell an asset, ab asset ki definition is given to you. If you transfer an asset and if there is a capital gain, you enter this head. Clear? So now, if you transfer an asset and if there is a capital gain, you enter this head. So here from this time they have added ULIP, unit linked insurance premium, policy amount, what you get, ma'am, life insurance policy amount, what we get on maturity is so exempt, correct. But few cases, this is taxable. That's why 194 DA TDS is also deducted on some received on maturity of LIC. So when it is taxable, it will be treated as capital asset or capital gain calculate hoga. How capital gain is calculated, that is not in our syllabus. But what is important right now is that if there is an amount received on maturity of LIC and if it is taxable, it's going to be taxable as capital asset. Okay, what are those cases? Any amount received along with bonus which is not exempt under section 1010B, it will be taxable under capital gain. For example, when you pay the single premium exceeding 2,50,000, then amount received on maturity of such policy wherein single premium paid is 2,50,000, it is going to be taxable. Next, 1010D. It shall not apply if premium is payable by a person for more than one ULIP. If aggregate premium for 2-3 policies paid during the year is above 2,50,000. I have taken 3 policies, one for 80,000, one for 2 lakh, third one for 50,000. Now 80,000, 2 lakh, 50,000. Mila ke have I crossed the premium 250? All these policies when they mature, either on the death or on the maturity date, that will be taxable under capital gain. And so these cases, whatever amount you receive on maturity, it's going to be treated as ULIP. And from this time, the topic you all have been looking forward and asking me a lot of questions is VDA. 2 seconds, huh? Just read the full form of all this and all. All right, chalo, let us continue this now. So VDA, what is VDA? Virtual digital asset, that is cryptocurrency, Bitcoin and all. From this year, it is going to be taxable. So first thing is it is treated as a capital asset. So your list of capital asset, no, in our routine material, we give capital asset is like this, except stock in trade and government sovereign bonds and all. So now taxable over there is ULIP, which I told you, this one, and virtual digital asset. Cryptocurrency, Bitcoin is very well your capital asset, and when you transfer it, all right. So people are not used to, everyone is saying abhi to chutti hai na, classes nahi hai, and I'm recording so many lectures, this and some concepts. Yesterday someone was asking me salaries, how that basic salary is calculated when they give slabs in exam. So keep watching that tax concept playlist. It's a pakka wala promise, superbly your concepts will be clear. So they're thinking कि कुछ काम नहीं कर रहे पर बहुत काम कर रहे. चलो चलो चलो, back to it. Yeah. Yes. Anyone is having any doubt? VDA, you all know cryptocurrency, Bitcoin and Ethereum and whatever it is, it's going to be taxable as capital asset. So if you gift that to someone, gift may also it is added, income from other sources. If you transfer VDA, TDS will also be deducted, which we will again cover in the TDS topic. Right now, all the information related to VDA I am talking about. Section 115 BBH has been introduced. Okay, right. And it says that cryptocurrencies are defined as capital asset. There's some confusion related to this, but if you take it as a capital asset, capital gain. If you buy and sell and maintain a stock of cryptocurrency, it will be like your stock in trade and your business income, just like shares and all. If such transactions are substantially, then it will be taxable as business income. Clear? Cryptocurrency income, whatever you get, is taxable at flat 30% market. Very important for your MCQ. It will be taxable at flat 30%. Clear? Now, this provides that no deduction is allowed in expenditure other than cost. Cost of cryptocurrency is deductible, but related to that transfer expense, this, that, other expense, nothing is allowed other than cost of acquisition. No deduction, no set off, no basic exemption, just exactly like your casual income. Lottery ka income, how is it taxable? Flat 30%. Can you say I am a housewife, I got lottery of 5 lakh, at least give me 250 basic exemption? No. Can you set off your business losses? And no. So can you say KBC mein price to laga, but from Hyderabad to Mumbai I have traveled my to and fro expense. Okay, I got lottery income, but lottery kharida 50,000 ki, wo to do nothing doing. No expense, no set off, no basic exemption, nothing. But here one thing allowed is cost of the cryptocurrency you are allowed to deduct, but not related expense. Clear? And whatever income you get, flat 30% surcharge ECS के साथ. So cost of acquisition will be deducted if income is taxable under capital gain. No indexation benefit is given. Ma'am, I am holding cryptocurrency for more than 2 years, 3 years, 5 years, कुछ नहीं. Age wage कुछ नहीं है. 30% flat, it is taxable. But see now, 30% flat in capital gain chapter or in business income, not in other source. No deduction will be allowed pertaining to cost of improvement and transfer related expense. And this shall apply for the purpose of computation of tax. Okay. Loss arising on the VDA. Suppose you've sold cryptocurrency and there is a loss. Can you carry forward that loss 4 years, 8 years? No, it will lapse. I have purchased cryptocurrency in 8 rupees and I sold it in 6 rupees and 2 rupees is loss that has gone into dustbin. Nowhere you will be allowed to set off that loss. TDS under 194S, which again I'll repeat in the next video also, from 1st July 2022, this is VDA, all the provisions are applicable from 1st July. See, from after 1st April, they were also confused, isko kaise karna hai, all. So guidelines ke saath, this is applicable from 1st July 22. And they say, person who is responsible for paying to resident any sum by way of transfer of VDA. I have transferred, Dipti Chheda ma'am has transferred to student. Okay. I have sold you cryptocurrency of 5 lakh. You will pay me consideration and you, dear students, will deduct 1% TDS. When a person is responsible for paying to resident any sum by way of consideration for transfer of VDA, TDS is to be deducted under section 194S. R is also added. वो हम करेंगे perquisite के लिए. S 1%. I am transferring cryptocurrency to you, dear students. You pay me consideration. At that time, deduct 1% TDS. Okay. Even if VDA, which a virtual digital asset, I call it as, is gifted, it will be taxable in income from other sources. And if it is like VDA is like your routine stock in trade, business income. Okay. So this is all about VDA. Now, yeah, 50C, there is a small amendment. What is 50C? You remember? Stamp duty or actual sale consideration, whichever is higher. And then go to valuation officer. If valuation officer gives value above the stamp duty, then take the stamp duty. So many times in capital gain of the property, if your actual sale consideration is say 10 lakhs and stamp duty value is 40 lakhs, I have got 10 lakh sale consideration from you, dear students. For capital gain, under section 50C, stamp duty value will be taken as the sale consideration. ये तो पहले से है. But TDS under 194IA was deductible on actual sale consideration. Why? Because actual sale consideration you are giving me 10 lakh, na? So 10 lakh pe 1% TDS was deducted earlier. Now from this year they said, even though the sale consideration is 10 lakh, what is stamp duty value? 40 lakh. Capital gain is calculated at the stamp duty value. Stamp duty is paid on the stamp duty value. Then TDS also 1% on 40 lakhs. That is 40,000 and not 10,000 will be deducted. Is the amendment clear to all of you? I don't know, it's my weak point or good point. I cannot read word to word and explain. I'm explaining the concept. You want me to read? Padh lete hain. As per 50C, sale consideration is computed by considering sale consideration or stamp duty, whichever is higher. However, TDS was deducted 1% on actual sale consideration until now, under 194IA and all. To bring in consistency with the taxable income, now they say, if sale consideration taxable in my hands is not 10 lakh but 40 lakh. So TDS should also be deducted in 40 lakhs. And you can't argue कि buyer can't say कि अरे मैम but 40 lakhs तो मैंने पे ही नहीं किया, कैश तो मैंने 10 lakh ही पे किया है. But what is the capital gain payable on 40 lakh? And no one is doing nowadays. You all remember or not? इसके after effects. Take a pause. If 40 lakhs property, if I transfer in 10 lakh, 30 lakh will be taxable in your hands as gift, income from other sources. This is another consequence. Once again, I want to repeat, whenever a property is transferred for sale consideration, section 50C says actual sale consideration or stamp duty, whichever is higher. And that stamp duty or valuation officer. If valuation officer is higher, stamp duty. If valuation officer is lower, then valuation. That rule is explained again separately in your material. Now, if I have transferred the property to you for 10 lakhs, but stamp duty value is 40 lakhs, capital gain is payable on 40 lakhs. And this 30 lakhs is taken as income from other sources in the hands of the buyer. Now 194 IA says TDS should also be deducted under TDS should also be deducted for 40 lakhs and not actual sale consideration. Frankly, these two are amendments in TDS, but they are related to heads. And this video, actually, you need to listen twice, thrice, take the notes. It will definitely, I always say my wordings, to sink it, ink it up, likho, and then you will never complain that your paper is not over in the 3 hours. Okay, right. Last one for today, income from other sources. Same, I've already told you, related to COVID, when you receive the money from employer till the extent of actual reimbursement, it's exempt. Same way, if any amount is received by individual from any person in respect of expenditure, it will not be treated as income till expense. Survey Surishri 1 lakh rupees for medical treatment. Here's all the proofs and all for 80,000. 20,000 will be treated as gift income. Now this is above 50,000 to hi hoga, but 50,000 for all the gifts throughout the year. So that limit you all should take care. Same like salary, but there it was taxable in the hands of employee, excess money received from employer, and right now it is taxable as income from other sources. In case of death, if any amount is received from anywhere, it will be exempted, okay, provided you give all the details. It provides that a sum received by member of family of a deceased person. Someone in the family died due to COVID. Then from employer of deceased person without any limit, all exempt. You can write if you are having a printout. I always say material ka jitna 3D, 5D makeup karo na, it is good for you. A teacher should not give all the clear material. I've opened up my secret with all of you. So from employer, if any family member of employee is deceased due to COVID, and if they have received reimbursement, whole of that reimbursement is exempt, provided that should be within 6 months of the COVID positive and conditions are there. Now, any other person to extend sum or aggregate of sum less than up to 10 lakh. So if there's a death in the family due to COVID and you have got reimbursement from somewhere, then how much expenditure is exempt? That reimbursement is exempt up to 10 lakh. Beyond that, it will be taxable, provided it is received within 12 months from the date of the death and subject to conditions that death should be within 6 months from testing positive, and he has to give the positive report and other details. And families, same what we saw in salary chapter, spouse, children, dependent, parent, brothers, sisters. Take your time and ask me, is this clear or you have any doubt? फिर से एक बार, in case of COVID, if any individual is getting money from any person, it will be exempt up to actual reimbursement, remaining will be taxable as gift. If an individual is receiving money on death from employer, fully exempt. From any other person, it is exempt. Trust से या कहीं से भी पैसे आया है, it is exempt up to 10 lakh rupees. ठीक है? Remaining is taxable. Okay, set off के cases में a small addition is made in the form of section 79(1), very small, we can cover it up now. And it says that if you recover money, undisclosed income in case of search, raid or surveys, 132A and 133A and all, then no losses are allowed to be set off. This is just a common thing. You should know that if there is any raid at my house and undisclosed cash credit, unexplained expenditure, 10 lakh रुपए recover हुए, can I say, okay, 10 lakh is my legal income, I'm ready to pay 78% tax, but there is a business loss of 8 lakhs, वो तो allow करो, कुछ allow नहीं होता, nothing is allowed. And this is just for information. I have added this is not amendment covered in your books, but this is fine, very nice, that for startups and all, for Atmanirbhar Bharat startups and all, the government said that the tax rate for will be 15% for the companies who are indigenously manufacturing, because so many things we are dependent on outside for the parts and all. So for manufacturing, they have extended the time till March 23. The date of incorporation is extended to March 23, and commencement of business of actual manufacturing of the startup company till March 24 also you do, it is allowed. March 23 में startup company form हो जाना है, indigenous manufacturing under all the other conditions satisfied with Atmanirbhar Bharat startups and all, and March 24. Okay. So that's all for the tax amendment video lecture, first one, where we have covered all your amendments for the slab rates, no amendment in residential status, house property, agricultural income, salary, business head, capital gain, other source, all we have checked up. If you have any doubt, comment below the video. I'm looking forward to give lot of inputs to all of you. You send me a query, ma'am, this is not clear, I'll make a 5 minutes video. Just watch the tax playlist. It's a promise, not a fake promise. When I'm sitting on this chair, आप एक बार खोल के देखो tax concept के playlist. Interest on loan, I have made a video with a flowchart, and it's going to be surely clear. Okay. So if you have any queries, or if you have other queries other than this related to income tax, GST, just comment below the video. Always willing to help you all. With this, make sure till you wait for the next amendment lecture for the updated return TDS. It's already ready, but to be recorded. I have not recorded. The material is ready. I'm being honestly कि बहुत सारा काम है. You need to put it in the material in my booster notes, which I circulate with all my students chapter wise. So one day before exam, if you read all the booster notes, gist is always clear, and you can outperform and get exemption in income tax. Income tax is not tough, but I do agree it is vast. Badi basket hai, so it requires repetition. Sometimes orally, sometimes just listening, headphones laga ke. Iske saath watch the marathon revision lectures and then start solving problem headwise. Anywhere you are stuck up, join the Telegram group, send the picture of that problem and put me a voice note. I'll clear it with a voice note. It's a promise. Lots of best wishes to all of you. Make a super duper workable plan and start your preparation. Consistency is the key. अभी से पढ़ाई करो तो end moment पे pile up नहीं होगा, and you'll have beautiful time for revisions for RTPs, MTPs, and solving written exam and all. Right? Wish you all the very best. Thank you so much for watching the video till end. Thank you. Bye-bye.